Happy days, happy days. Okay, boys and girls, hope we're well. Can I just get a quick sound and visual check? Make certain everyone can see me. Just shout in the Discord. Happy days, all good. Result. Okay. I'm not sure if I'm going to be going on the whiteboard today, but we'll just check, see if that's working as well. Boom, boom, boom. Right. I've got visual on whiteboard as well. Yeah. Seashell, hello. Yep, no sound. Try it now, Damien. Yeah, all fine. Happy days. Good stuff. Not very technical, boys and girls. Not very technical. Haven't quite figured out how to switch the buttons on yet. Getting better, though. Make a coffee. Well, sort of. Ask Winky to make a coffee. Right, let's see who we got. So, 𝗖𝗢𝗡𝗘𝗖𝗧, who we are now going to call Eric, because I can't pronounce his first name. Sorry. But it was lovely to meet up with you in Cyprus. Damien, Big Balls, who we're now going to call Hobbit, because he's about so big. Again, it was fantastic to meet you guys before we set away. Absolutely wonderful. Stephen, Andrew, Seashell, what's a new name? Good stuff. Very welcome. John Harry, how are you doing, kid? I will get down to Doncaster before long and catch up with you as well. So, happy days. Don't worry, Big Balls. You'll always be big balls to us. Right. Okay. Well, today, I wanted to really talk about the way you frame your mind and how you can apply that to the charts. Because so many times it's just show me a strategy. Just show me where to get in, where to get out, all of this. Which is fine. It genuinely is, because you need the framework. However, it's only a small part of the puzzle. It's a very, very small part of the puzzle. Your mindset and how you apply yourself to the charts and basically trading is what will make or break you. And it's genuinely so. Now, I did a coffee with Scruff, which I've just been finishing this morning, which is why I'm late. And I've gone right through my life story. The whole lot. The highs, the lows, the absolute destruction of my life and the rebuilding of it. And that might give you an idea of why mindset is very important to me. Because when you fail, and I do see it, I see it a lot in the groups, you have a tendency to panic. And that panic can breed, well, I was going to call it gambling, but maybe that's the wrong word. Maybe it's even desperation, because you're desperate to get it back. Now, I had an email yesterday. Was it yesterday or the day before from a chap? And he was so far in the red, it was unreal, but he'd allowed it to get that far because of desperation. Now, I don't know if I cut it out and showed it on the Discord. If not, I'll do it, so I can't show the guy's name. But cut long story short, he was 85 grand in debt because of trading. And why? Because he let somebody tell him a tip, a signal. And that signal has destroyed his, well, basically destroyed his life. And that is what I'm trying to get across. And I get asked pretty regular, why don't I do signals? Why won't I furnish this? That is the exact highlight as to why. You see, I can be completely wrong on the direction of the market. Completely wrong. But I'll be right with the trade. Why? Because there's oscillations within it. And if I can get those oscillations correct, in other words, I know where the extremes are. And that's why when I'm talking to you guys, I like to work from extremes, a stretch Bollinger Band, a level, an RSI that is completely sunk or at a high point, because I know at these points there's going to be a reaction, and the key reaction point is the level, because it'll push up, and then when it gets to said level, there's going to be either a reprieve where people are going to take profits, or the banker's looking at that level and thinks, well, okay, the RSI is pretty high, Bollinger's stretched, so a lot of people might go short here, so we'll entice them in and they'll force the market down and then slam it the other way and take all the stops out. Now, I know this happens, so you can work within it, but you've got to be conservative with your target and your pricing, where your ATR comes into play. And you put all of these little pieces together and you're not greedy, you make some money. It's what you see me do every single day. Now, if I turned around to you guys and said, right, I'm going to sell it at this level, everybody piles in, you'll always have the guy that'll try and stretch it too far. Now, I might be in and out before you've even thought about it, but they'll hold on, and then the market does what the market inevitably does, and what I've just described with the big boys, they'll let it go so far and then slam it the other direction, and you lose all your money as the guy did. So does that kind of make sense around the mindset and why I particularly don't like signals too much? Reason being, it was brought up a couple of times this week, and I thought it'd be a nice subject to discuss. So you lot tell me. And today what we're going to do is kind of open Q&A. I mean, if you want me to go on the charts, we'll go on the charts, and you guys can pick it and one thing and another, but try and discuss your mindset and how you want to approach the markets, because I think that is as much an important part of trading as just saying get in here and get out there. Hope that makes sense. Let's have a look, see what we've got. So Mark, he's late. Where's me apple? You should know if you're late, you bring teacher an apple. I'm not a teacher, so I don't want an apple. Star Wars figure would be very kind. Very good. No, you're more than welcome. You went to get your coffee, so that's fine. I've got mine. Who else have we got? Steph, nice to see you. Another one I've put a face to, and it is good, this getting out and about and meeting you guys. It genuinely is. And I'll try and do more and more of it as time goes on. Tried signals, never again. So much, and I'm glad that. Now, Eric, as he's now named, said something to me when I met him, and it kind of resonated in my mind a little bit. And he said that he wants to learn how to fish rather than be given a fish. And that is so true. You know, teach a man to fish, he'll eat for a lifetime. Give a man a fish, he's fine for the next 10 minutes. And that's what signals are. They don't teach you anything. And I genuinely hope in the group that we've kind of built up together that you are learning to fish. All right. Now, you understand roughly how I trade. I don't change, not really. I can trade pretty much anything, but that's through experience. You know, I can have a blank chart and a single moving average and I'll still be able to trade it. And I kind of show you that regularly. Reason being, kind of really see what the candles are doing. So I don't need a volume profile. Big candle, big volume. Common sense. I don't need my levels in as much as you think, because if I flick through the charts, I can see the turning points. I don't really need a Bollinger Band to a degree, because I can kind of see the stretch points in the candles as well. But you overlay them to help you. But as you go through time, you start seeing it. And a lot of the, case in point, I can't spell for shit. I genuinely can't. I never have been able to, kind of borderline dyslexic. And when I was younger, my gran made me do word search and crosswords and everything. And I had to do it every night for 2 hours. And why? Because she wanted me to push forward, and it helped me. But what it gave me was a very good memory for words. So I mightn't be able to spell them, but I can remember them. The charts are the same. You know, I've seen it before because I've spent so much time on them, and which is why you can trade a blank chart. Hope that makes sense. Let's see where we are and what you guys are looking for. Name one whoa, that's a name and a half. Very welcome to you. Call me NS. Fair enough. NS. Ness. Nessie. We'll call you Nessie. There's a good one. Can you list all your strats and the percentage on average you use on average? I'm new here and watch a lot. Right. Strategy wise, it's not really lists. And again, that kind of illustrates what I'm talking about. Well, the subject today was mindset and roughly how we apply ourselves to it. And first question, what's your strategy? Kind of answers that. But in answer to your question, your strategy is not the most important part there, Nessie. But for me, I predominantly use two. And 70% of the time will be GoldenEye. I use GoldenEye every single day for day trading. You know, on GoldenEye is very simple. It is locked between two levels. The GoldenEye is a ratio between those two levels that the price predominantly tests, certainly more than 80% of the time. And it is made up through a Fibonacci sequence, and then you overlay some stretch points, Bollinger Band and an RSI. And if you want to go that little bit extra to help confirm a direction, you can put on a MACD. And again, the MACD settings I use are Fibonacci. I change them slightly. And do I use it a lot? Not particularly, but the MACD, I'll leave it on the chart to help confirm the direction. And the other one I use, which is all of my swing trades, is the river. And the river, again, it's a very simplistic strategy. It doesn't work very well below 4 hours. It works best on a daily. And you can leave it running for days, weeks to months. The trick with both of the strategies is not to put all your eggs in one basket, which is why you see me split my trades up. I like to break them up into 5 pieces, and I'll gradually move into a trade backwards. I don't add into a trade as it goes forward. I add into it as it goes against me. Why do I do that? Well, that reduces exposure because I'm never fully exposed at the point of going into market. And as each piece is placed into the trade, it reduces the risk because it is deeper into close to the stop, because the stop is the same for each one of them. But it has so much further to move up. It increases the profitability, which increases my RR rates. I never look at RR rates, risk return. I think they force a trade, but by nature of what I'm doing, it does increase that. What I'm actually looking at is ROI, which is return on investment. So I hope that kind of helps. And if you go through the videos and talk to the guys in the Discord, I'm back to normal tomorrow after my holiday. We'll constantly go through it, and I'm sure the guys will point you in the direction of videos that they found helpful. And what I will do over the course of the next week or so is I'm going to be building up my sheet on a morning, and you'll see when I'm getting in, I do a how and why I'm going to trade before I take it. and you'll start to see it. So I hope that helps. So, and Andrew says, comes with experience. Well, that's it. Experience is key. When I see the bozos saying that they are going to make you rich in 2 weeks if you buy my course, of course you will. I bought hundreds of courses, spent thousands on them. They're all the same recycled bollocks. And there's only one thing that'll make you successful. You. Look in the mirror and figure out whether or not you got the mindset for it. So where else? Let's see what Mark has. Right. Oh, okay. That's quite an interesting point there, Mark. You're letting your losses run too long and you cut your profits. See, again, this comes back to your mindset. You see, as human beings, we very rarely admit we're wrong. And certainly when I'm talking to guys more than the ladies, it's more a guy thing than a lady thing. Why? Maybe it's testosterone. I really don't know. But I used to have a problem with that myself, and that's kind of why I have 2 points on of stop loss. Because the first one is what I call a thinking stop, and it has to slow me down. You know, I have to stop in my tracks and think, am I wrong? And I'll reassess the chart. And over the period of time, I've kind of conditioned myself to one of sort of 3 points. I am wrong. And if that's the case, I'll kill it. I'll just go, right, I'm wrong. I'll accept my £100 loss or my £500 loss, whatever it happens to be. And I'll fight again tomorrow. But once I kill it, I don't go back to market that day. That's kind of a cast iron rule. I am wrong. Get out. Stop. So why do I do that? Well, if I go back to market, I will have an emotion in me, which is anger. And that anger will make me lash out at the market. It's hurt me. I'm going to hurt you. But it's the David and Goliath situation, you know. Would David stand toe to toe with Goliath in a punch-up? You know, punchy. No. Goliath would swat him like a fly. So there's no point getting into that fight. So how did David win the fight? He stepped back and he used a slingshot and he was focused in that. But if he was angry, he'd have missed. And if he missed, he only had one shot. Goliath would have knocked 11 bells out of him. That's kind of the way I look at things. You know, if I can't win the fight, or I'm going to go into the fight with anger, I've already lost. And that comes back. I mean, many years ago, not that you'd see me now. I used to be heavily into martial arts as a young man. Did all sorts. And that came through as well. You know, you go into a competition tournament. If you try and win that with anger, no, you're going to lose. You have to keep calm mind. So when you're letting your losses run, that's what's happening. You're not having a calm mind. You're panicking. And likewise, when you're seeing your profits go the other way, you get excited, but fearful. And they're 2 different emotions, and they are polar opposites, but they have the same outcome, which is the destruction of your account. Because when you see your small profit, you'll grab it and you think, fantastic. Now, there's nothing wrong with small profits if it's part of your plan. But if you win 10 £1 wins and you think, brilliant, I've made 10 quid, but you let one run at a 20 loss, well, all that good work's been unwound in one go. So 2 stops. So the second part of my stop process is, am I on the fence? Am I right? Am I wrong? I don't know. It's kind of tipping point. So at this point, I'll take half of my loss off. So say I'm looking at £100 loss at this point, I'll scale it back to 50. Yes, I've got a slap on the knuckles, but I'm not out of the game. And if I am kind of on the right side of the fence and it moves back up, it could pay off that loss, or at least get me out at a very small loss, right? So that's how that works. Or if I think I am right, you know, because I've got 3 elements here, I will just leave it be. And that's what a thinking stop does. But a hard stop is the point of no return. If it goes down and it hits it, and if I am not in front of this screen, I will have a hard stop in, just in case the market decides to disappear while I'm out. That's it. You know, and that's how I control it. And it's a good way to control your emotions as well, because it's practical. You're not living on a prayer, you're planning it out. Okay. And then that's why I stage backwards as well, because I know the market's going to go backwards for me. Always does. Very rarely you enter the market and it just keeps on going. It'll come back so far. So is it not common sense to get a better price? You haven't come across that. It's called dollar averaging or pound averaging, depending on where you are in the world. So there we go. Right. So where else are we up to? So ego gets in it very much so, Stephen. Very, very much. Again, it's a guy thing. You know, I'm not sure how many of you guys play golf. As I got older and sort of fatter, which I've done a really good job of. Nah, I couldn't care less, to be honest. You end up down the golf club and all that sort of thing. And you'll always have the guys down there that all they're interested in is the big drive. You know, and there's an old saying, you drive for show, but you put for dough. The guys who win the tournaments are not big hitters, but they're very good around the greens and they can get it. They can zero in on getting the ball in the hole. Again, it's ego. It's marvellous to hit the 300-yard drive. And when I was a younger man, I could do 250 to 275 quite easy. Don't think I could do it now, but the guy who beat me all the time could never hit the ball anywhere near as far as I could, but he beat me every week because he was consistent. You know, just bop, bop in the hole. Dead simple. Me, I was rampagious. Way. So there we go. So let's have a look. Interesting that you stop. Yeah. You've heard me say it a few times. One of my mantras is score, score, stop. And it's like this. Staying out of the market is as much a trading position as being in the market. And I think a lot of people don't get that concept. I'll trade once, twice a day, and that's it. You know. And again, in the Coffee with Scruff that I put together, I kind of illustrate that. There's a guy, he's a complete tool. He really is. And Big Balls actually found him the other day. He is one of the original Popeyes that email me and sort of stick it into me as much as he can. He's an absolute dickhead. But he was publicly sort of trying to shame me by saying my salary's 30 grand and I drive a Range Rover and it's all sus and one thing and another. He knows nothing about my life, not a bean. My Range Rover's second hand and I live in the north, and my 30 grand salary is my basic. It's not my on target salary. Now, anybody that works for a decent company knows the difference between having a basic and an OTE salary. You know, my basic just pays the bills. Goes on my back, pays my electrical bill, which is massive at the minute because they whack the bills up, all that sort of stuff. And anything above is the luxuries. Then I trade a car account, I have a pension account, I have this. So he's got no concept of what my salary is, and I've got no desire to tell him because I don't have to justify my life. But what it means is he was making an assumption. All right, and that's dumb. Now I work to various targets. You know, if I do 200 quid a day, 6 days a week in my particular wage account, I'm happy. Some days I do considerably more, and I just save the money. You know, it's very simple. It's all about controlling your mindset, you know. And once I've hit my sort of plateau, the figure that I've set out, I just stop. Why? Because if I go back, I'll give it back. The market will take it away from me. Score, score, stop. But if I happen to have a pretty bad day and I lose, I'm losing for a very good reason. I got it wrong. And if I've got it wrong, it's because of two things. Either it's just one of them days and it's a black swan and the market's decided to kick me in the bollocks. And I don't want to be involved in that either. And you've seen me do that when the FX market collapsed on the pound the other week. Well, it was last month, and it was like that for about 2.5 weeks. I stepped out of it because I couldn't quite gauge it. And if I went into it, I was gambling. So I stopped. And the other side of it is, I don't want to be a gambler. It's my job. I just want to get in, do my tasks, and get paid for it. Maybe I'm wrong. It's not fun for me to go to the markets, which I think some people do. And when I see the big lists going, oh, I've been in, and they've got a list of maybe about 30 odd trades. The only thing that's running through my mind is that one trade broken up, which I'll go with, or is it single trades? Now, if it's single trades, you can't be that lucky or that good consistently. Eventually, you're going to get clipped. And you'll get clipped, as we've just discussed, when your ego is at a high point and you think you're invincible. And Goliath is the person that's standing in front of you and you ain't got your slingshot. And he's going to knock 7 crap out of you. And then all of this good work and this sort of ego, as we've just discussed, has been your destruction. I hope that kind of makes sense. I genuinely do. So let's have a look. Be water, my friend. Bruce Lee, very much so. And the other famous one is, don't look at the finger. Look at the moon, or you'll miss all the heavenly glory. Enter the dragon. So what else have we got? Damien, what about half and your loss? That's exactly it. And that's kind of what I've just been sort of discussing. I have 2 stop points. You have a hard stop loss where regardless of what you're doing, you're out. You're wrong. If it goes 1 pence more, tough. You are out. But so far up, have a thinking stop loss. And that thinking stop loss is where you stop in your tracks. You reevaluate what is going on. And if the conditions have changed and it's wrong, get out. If you're on the fence and you think, it may swing in the next 5 pips or so, but you're unsure, take half of your loss off. And again, if it runs to full stop, it hasn't hurt you as badly as it would have been by leaving everything on the table. Or if you still think you're right, hold on. Very, very simple, Damien. I hope that makes sense. So you close. Yes, correct, Eric. At 50%, I kind of, or I should say, my thinking stop rather, I'll make a choice. And if I'm going to come out, I'll take part of the position off. And I know it's a loss, but I'd rather lose a little bit than let it run and lose a lot. Okay. Yes, Andrew, you are very true. Sitting on your hands is a good position. In fact, it's probably the hardest position that you will have to master, because the itchy trigger finger is, well, it's exactly it. I don't trade opens. Why don't I trade opens? It's unpredictable. But I watch the chitter chatter and it's like, right, the London Open's coming. And the London Open's the only one I really stay out of. Why? Because it's the most vicious. I've got no idea where the market's going. And even if I made a choice the hour prior thinking, right, this is going up, on the open, it'll easily go the opposite direction, because it often does while it's trying to position itself in the market. But it'll dip so far down, it could be enough to take your stop out. So I just don't trade it in the first place. But I've had an itchy trigger finger. I see the first 5-minute burst. You think, off we go. This is going to be good. I'm getting in. And then the market has other ideas and you've got in at probably the worst point. So you're better off waiting sort of half an hour to an hour, let it settle, and then you've got the rest of the day to trade it. Why is the London Open vicious? Well, you've got the close of Asia. So you've got all of those traders resetting and getting out, doing whatever it is they do. You've got the open of the Euro markets. You've got the London pre-markets and then the London Open itself, all converging at the same time. And it just explodes. And London is a massive financial hub in itself. It's just a little bit too volatile. And then the next big spike is roughly about 2:30 my time for New York opening up, but it's not as vicious as the 8 o'clock open. Okay, so let's see where we're at. So sitting on your hands, seashell. Have you say about making 200 a day, but really, yeah, well 200 quid a day, where that comes from is from my basic salary. And I work everything out into little bite-sized chunks. I always do. It's why I break my accounts up as well. It just controls what I'm trying to achieve. It helps me work my task out, shall we say. And basically, I don't like trading Monday. I don't like trading Friday. I do it normally because I'm kind of goaded into it by you guys. And I always feel honor bound to back up what I say. So I'll do it, but I'm very cautious on a Monday and a Friday. So my true trading days are Tuesday, Wednesday, Thursday. Now, 600 quid across 48 weeks of the year, because I do want to have a holiday, is roughly about 30 grand. And 30 grand for me is my basic. And that's kind of what I work to. And then anything above is brilliant. So that works out. Nothing wrong with a Range Rover. Well, you guys know I've wanted a Range Rover since I was a kid, to be honest. I've always wanted one. When I was younger, and I don't know where my son gets it from, well, all my sons actually, they're all into these fast, speedy cars, you know, 2-seater and yeah, the bloody crap. Well, I think they are. I mean, he's just bought a Civic R again. The eldest one. I mean, bloody hell. I've got a Westfield in my garage because he's run out of room on his drive. I can't see the attraction, but as a kid, I always liked the luxury barges. You know, the big 7 Series BMW, Jaguars. There was the Rover SD. What a car that was when I was a kid. My dad used to have Granadas, you know, and they're a massive old boat. So luxury barges is my thing. And if you ever see like the pictures of the cars that I've had in the past, they're all sort of big Mercs and stuff like that, X5s. But I'm a big guy, you know, and yous have met me. And I thought Finney was about 6 foot, but he's actually about 3'2". He's like a little hobbit. Oh, sorry, kid. I couldn't resist. I genuinely did. I thought you were a big, tall, strapping lad. There we go. Anyway, so let's see where we're up to. Okay, so Eric's actually there's a thing, right? Eric's picked up on M5 creating FOMO, fear of missing out. Now, when you're looking at the charts, what you got to remember is that the price is the same whether you're looking at a 1-minute chart or a monthly chart. It's linear. It runs right through them at the same point. But if you look at the bigger time frames, they have more information in them to give you weight to the idea that you're going to have. So for argument's sake, you're 35 minutes into an hour's candle and it's fat bodied and it is predominantly green. It's a reasonable assumption over the next 25 minutes this is going to continue to move to the upper side, because that hour is telling you there's a lot of buyers in the market. But if you were looking at the same time on a 5-minute chart, it's microed in so much and it may look good, but it might also be jostled up with a lot of red candles because it will oscillate and you can make the wrong choice simply because you're not looking at the bigger picture. And the way you look at the bigger picture is if you go back to your hourly and you're seeing this big fat green candle, you look at the candles behind it. Now, if they are predominantly getting bigger and greener with a long tail at the bottom, it adds weight to the decision that you've made. But those hourly candles, as it says, it takes an hour to sort of form, and you go 10 candles back. Well, there's 10 hours of data. Drop that into a 5-minute chart. You're not really seeing 10 hours of data. You know, you probably zoom so far in, only into a very small fraction of that. And what happens is it throws you off. So make your decision on an hourly candle and above, but then zoom in to enter on a 5-minute chart. That cuts out the fear of missing out. Why? Because your decision's already made. You know, I'm looking at the hourly, I am going to be going long or I'm going to go short on whatever your analysis is sort of pulled out. And you are looking for your levels or your entry points based on a fib. There's key points on a fib. You have the 14%. It's supposed to be 13, but I'm superstitious, so it's 14. Your 21 and your 23. Those can give you entry points. The best one of them all is the 23 because it allows the market to start moving in that direction. Then you have your exit points, which is your 38 to your 50, so that zone there. And then your running point is 50 onwards. And if you've got it all broken down and made up before you've even got to your 5-minute chart, that stops fear of missing out because you've already planned it and you're just waiting to get there. So I hope that kind of makes a bit of sense. So where else are we up to? Fortune trading is full of ego-driven idiots. You are so right, my friend John. You are so right. What happens is it's very nice to see somebody in a Lamborghini. And I know it's the poster child of the trading world that the Lamborghini is sort of the car of choice. It's just because it's a luxury thing, but it's actually become a symbol of the dickhead. And you can rent, I could have a Lamborghini outside my house tomorrow for 1,600 quid, right? Now, if I'm going to be flogging you guys a course or whatever, and I don't, and I probably never ever will, I'm happy getting my wages off the screen and running the Discord, and let's be honest, it's as cheap as chips for what it is. And that helps me do things that I like, which is help the heroes and seeing cuthberts, you know. But if I was selling a course, I could rent this car, go out for the day, take a few pictures with it, and then tell you guys you're going to be driving this in a month and charge you 500 quid each. Well, I've only got to sell 3 courses really to break even on costs, you know. And then from there onwards, everything is profit. It's a good business model. Likewise, I can do a similar thing. You know, you can rent a sort of very, very nice house. And I say that all the time as well. But if you actually look deeper into it, there's no personal effects there. So you don't see pictures of the family on the wall or on sideboards, etc. You rent the house for 800 quid for a day or 2 days. And you take lots of pictures and one thing and another. And again, it's a Fazagi. And it's kind of why I don't really need to justify my life, but I do give you a snapshot of what it is in real terms. I'm always here. You know, some of you guys even came down to the shop that we had before we sold up in December, and you've seen me in my working environment. And there's some of you who have met me, and I'd like to think that I'm just the same in real life as I am on the camera, an obnoxious fat dickhead. But I am what I am. I can't change it, and I don't want to. So, hope that makes sense. Anyway, so where we're up to. I'm glad it's sinking in. Let's see, Andrew. Always remember we are only a small... Yes, bingo. And that's why I discuss about score, stop, and keeping your targets realistic, Andrew. Because if you go into the market, say cable for argument's sake, cable runs approximately 80 to 90 on a standard ATR, which gives its breadth of market roughly 160. So the chances of you hitting the very top and the very bottom to get all 160 pips is borderline impossible, because it will oscillate around. But if you were realistic with your target and you looked for maybe half of that and then a third, and why is it half that and a third? Well, because if its ATR is say 90 and it never looked back, it can go 90 that way, but it can also go 90 the other way. And what it can do is it can go all the way up and then slam all the way down. But the measurement point will be from the point of entry to the close. You don't know how the market's going to react in the next sort of 24 hours to the next few days. But say you work on the first leg of 90, and then you look for a third of it. Well, that's about 30 pips. And then just work from there. And then that's kind of where my 10 to 20 pips comes from. It sits within that range safely. And it's all about being safe. Again, it comes back to mindset, not gambling and not looking to overstretch the market and not overstretch my account at the same time. So that's what I do. Wow, the Austin Princess. Now there's a blast from the past. Bloody hell. My sister had one of them. Well, let's have a look. Nessie, let's see. The pound sell off was something else. However, does one really know what's going to happen next? No. It is the short answer to that, Ness. You can make a play based on the information you have at hand. In other words, you're looking back in the charts for an echo of the past, and an echo of the past is the levels. Now, if you look at your monthly, weekly, daily, those are where the big boys play, all right? And they create the market and they create the turning point. And as the guys here, I know you're relatively new, they'll tell you that I'll mark a chart up based solely on monthly, weekly, daily, and pretty much down to it, I'm pit perfect. Why? Because the same people who created those echoes of the past are still trading today, and they work on those memory points in the market. And the question is then, how far can you predict into the future? Well, I think you can probably look at the next 4 to 10 hours relatively accurately. Once you start moving into the next day further forward, it starts reducing in probabilities. And it's kind of why day trading has a very good hit rate and swing trading not so much. Because can I tell you what's going to happen next week? I haven't got a clue. Not a clue. Right? But I can manage my trade every single day. And when we go back to when you asked about the 2 strategies that I use, I will have my charts all lined up. And if I'm in a swing trade for a few days to a few weeks, every time I come to a level, roadblock, if you like, I will take so much money off and then adjust the stop. And why do I do it that way? For the exact reason you just said. Nobody knows what's happened. But what I do know what's going to happen is, at that level, there's going to be what's called a bob. Now, bob is bounce or break. Now, it's either going to bounce off and come back to where it came from, in which case the stop will take me out. And if I've had good sense to have that stop in a positive expectancy, I'm still going to be paid, and then I'm out of the market, the margin is released, and I just look for the next trade. Or if it breaks and it keeps going, I'll then hold the trade to the next level and repeat the process. And that way you're managing your trade. So for all you don't know what the future holds, you can manage every single trade the same way. So hope that kind of helps. Not going to sell. Well, no, I'm not, Steph. I've got no real desire to do it, to be honest. I've been asked many times, and I just don't want to become one of them. I genuinely don't. I know a lot of my time is now getting taken up with the Discord and one thing and another, and I may have to sort of evaluate how I do things. But ultimately, I don't think a course can help you. I don't mind doing the one-to-ones. In fact, I quite like doing them. I do maybe 1 or 2 a month, and it keeps me sharp and it genuinely brings value. But I think that's about as much as a trainer I'm going to be. Now, if I become an educator of sorts, it will be more down that route than selling a course. I don't think you need a course. I mean, you can go to Baby Pip's education tab, and it's as good as any paid course. Because what's a course really going to tell you? It's going to tell you how to draw a level. Maybe not. They'll tell you what a candlestick is, you open, close, high, low. They'll give you a vague idea of what a moving average is, but strategy is personal specific. We all have different times of the day we can look at the markets. And there isn't really, well, if there is a one-fits-all strategy, GoldenEye is the one, because it doesn't matter if it's a 5-minute chart or a monthly chart. The principle is identical on them all. But the difference is you. Whether or not you can cope with your mindset, cope with your FOMO, and understand what it is you're looking at in the first place. Now, that's quite difficult to teach in sort of 10-minute course or a 15 or a hours course, because I've seen one where, oh yes, there's 16 hours, and I bought the thing and it's just absolute bollocks. Vince Stanzoni, you might have heard him. Basically it's just a couple of moving averages. There's a few out there, and even the spreadsheet bull, or the spread bet bullshitter, and you know exactly who I'm talking about, Steph. It's the same. He's a Vince Stanzoni clone. Nice guy, one thing and another, but the actual strategy is it's okay. It's not bad. Does it work on low time frames? Not at all. You know, it's very simple. It's 100 and a 200. In the middle is what's called no man's land. And if the 5 breaks outside of that, well, that's a 5-period moving average, by the way, guys. You enter the trade and you hold the trade till it goes back into no man's land. It's a very simplistic system. And if you're on dailies, it works. But you have a lot of losses with it as well. And it's whether you can cope with those losses. So I'm not really bothered about doing that. So I hope that all makes sense. I've been banging on for God knows how long. If I was to sum up training and mindset, less is more is what you want to be looking for. You're better off letting a substandard trade go and waiting for the next one. You know, make certain all your boxes are ticked. I never enter the market unless I have multiple confirmations. So I want to level. I want a stretched RSI. I want a stretched Bollinger Band, or I want to be able to see within it. I want to see a break of an 8 moving average. Why an 8 moving average? Is called a T-line. And it's where candlesticks were invented from. So it's a very good trigger point. And I look at these and I grade them. So if I've only got one element, it's like a C grade. If I've got 2 elements, it's a B grade. And if it's got all 3, it's an A grade. So that sort of thing. And that helps you, you know. But if you are just looking at a chart and thinking, time to go, that's fear of missing out. And that'll hurt you. It'll hurt you very badly. So where else have we got? Oh, FX signals. Yeah, he's a bit animated as well. I can't remember his name now. Is it Lockwood? I saw him in a trading battle a couple of times, and he lost every one of them. And Greg Secker. Greg. Bloody hell. Mr. Medallion, man. In fairness to Greg Secker, for all he's there all the time, and he is this all the time, he is quite entertaining. He has been round the markets forever, and he does genuinely know his stuff. But his money comes from the educational side of it, because not only are you buying his course, you're buying his trading platform, and then the trading platform is tied to a broker that he owns as well. So he has the money all the way through the process. So fair play, would agree, but at the same time, he does sort of make you laugh. But I'm so glad you didn't put that stupid, I think they call him Naveen or something. It's the guy who constantly, he says he's an ex-Barclays banker. He sort of always there going, if you're watching this, you're looking at it wrong and all. Just a proper sleazeball. I can't stand him. If I could ban him off the front of my channel, I would. There's him and Trade Without Emotion. Now, I know that guy. I know exactly who he is. He's an ex-marketer. And his system is absolute bullshit. Because it's not his. It's just a recycled... where he sells it with 2, actually. Using stupid retail charts. That's the chap. Can't stand him. And the other one, WB Trading, which is, I call him the wobbly trader. He just... it's the London Open, and the rotation is exactly it. It's to return to the 9 o'clock close of the European sort of aftermarket, and it's nothing more than a coin toss. It's a rotation of the market. Yeah, I know exactly who that one is as well, Mark. The ex-pawn crime lord, Philip Scott. He's as bent as a 9-bob note. Do you really want to give that guy some money? Because I'm pretty sure I don't. There's loads of them. But hey ho. So have you got any questions before we wind this up? And we'll see if we can make some sense of this. Because I can talk all day, and I can certainly slag off quite a few, but I think that's a bit unfair. Yes? No? Not to worry. Okay, guys. Well, if you keep an eye out later, you'll kind of see my life story, warts and all. It's about 50 minutes. I'm old, you see, so there was quite a bit to pack into it. But it might give you an idea of how my little bobblehead works. Badly, that is. I don't know. You guys tell me. I only do my job and kind of try and show you what it is I do. And It's not that I'm wise and I'm some old Kenobi. I'm not. I've just done more stupid shit than what you lot have done over the last 15 years. And if I can give you a little bit of advice in these little snippets, then that's good. And if I'd save you from, well, basically doing what the chap did the other day, then my job is done. So hope that helps. So there you go, boys. The next one will be back to the charts. I think it's nice to do just a talking head video and kind of tell you real life experiences as well. In fact, for me, it's more important to tell you that than it is to tell you how to get in and out of a chart. And as a parting word, don't gamble. And if you're trading 10 times a day, cut it in half. Do 5. And then once you're comfortable with that, cut that in half as well, but up your position size. And then you'll find you're making more money. Okay, guys? Off to go buy some protein shakes. No, it's not protein shakes you need, little boy. I think you just need my precious. Either that or we'll put you on a stretching rack. Anyway, I'll be coming down to Manchester soon. I'll buy you dinner and maybe that'll make you grow. Right then. Okay, boys and girls. Catch you all soon.